I still think we're going to get to 500,000? I'm very bad at the timing of these predictions, but let's just tell viewers and listeners what 500,000 actually is. It's still less than half the market capitalization of gold.
And Bitcoin will be at 500K?
I think so, because remember, it's not a big move. If you're going exponential in AI, you have one thing in the equation that's scarce and finite that can't be replicated, and that's Bitcoin.
Do you think the banks actually want to adopt blockchain technology and digital assets?
So I'm now going to get myself in trouble with everybody, okay? So I think they do. Do I want to have my margins cut by 80%? No. But is it going to happen? Yes. And they're going to fight it. They're going to fight it to the very end.
I'm back at Salt, Wyoming Symposium with Anthony Scaramucci, the founder and managing partner of SkyBridge and founder and chairman of Salt. Anthony, thanks for having me back at the event. And thanks for coming back on.
It's great to have you. I'm digging the hat too, by the way.
Yeah,
and
you like the look?
Yeah, you're wearing it well.
Thank you. It's a Western look.
It works for you.
I lived in Texas. I brought the cowboy boots. I don't think people could see that, but cowboy boots. Anyways,
it's working.
Last time we talked, you've been on the show a few times, but last time you came on was when we were at Salt, Bermuda. So not this year, but the year prior. And I want to kind of pick up on the conversation we had in May 2025. We talked about institutional demand, regulatory clarity. This is pre-Genius. Bitcoin's path to $500,000, which we have yet to see, and how tokenization could reshape financial markets, which I think is still very relevant today.
So you may remember better what I said, but I bet you I was saying that the institutions weren't there yet. Did I say that?
Yeah.
Because it really hadn't.
Maybe the interest was coming in, right?
Yeah, interest is coming in, but I got this very wrong in 2021 and 22. I thought the institutions were at the doorstep. It turns out they haven't rung the doorbell yet. Still, in my mind, yes, but I think so. Small. You hear the UAE owns some Bitcoin. Some of the state pension funds like Wisconsin own Bitcoin. They're buying it through the ETF. It's easier for them to own. But you don't hear institutional consultants saying, "Hey, you have to 1 to 3% position in Bitcoin," like some of the financial advisors say. I was at a Mercer event. I hope they don't mind me bringing up their name because they hate Bitcoin, and I was supposed to speak at this event, and the guy before me was talking about the reasons why he hates Bitcoin, and they had this big like Ghostbuster sign with the slash in it. And there was the Bitcoin logo with the Ghostbuster slash in it. And I'm like, that's how the institutions feel about Bitcoin. And most of these institutions are run by...
Or that was them.
Yeah, that was probably around the time, 2025, probably around the time you and I were talking. But I would say still-ish, yes, because look what happened to gold last year. M2 is going like this. Bitcoin went like that, okay? And for people listening, M2 soaring. Bitcoin stalled and then dropped 50%. Gold had a good year. It corrected a lot, obviously, but it was a momentum trade last year off of currency debasement. You saw the news this morning, perhaps, with what Besant is doing with yield curve management.
Right.
He made an announcement that he's going to take on the bond vigilante. So Bitcoin is up this morning, as it should be, but I think it's really stuck in the 4-year cycle. And so, yes. Do I still think we're going to get to 500,000? I'm very bad at the timing of these predictions, but let's just tell viewers and listeners what 500,000 actually is. It's still less than half the market capitalization of gold. And so let's do the numbers together. Bitcoin's at a $1.2 trillion number. Gold's at about 20 to 25 trillion, depending on the day. And so Bitcoin could trade 10x and still be half the market capitalization of gold. And I think that will happen now. The question is when, and I'm a patient guy, and I think people have been rewarded in Bitcoin if they're patient, even if they're suffering right now.
So you're not worried?
I'm always worried. I'm an investor, so how could you not be worried? I'm always worried, but I have,
best investors are patient.
I have confidence and I have some level of conviction that this will work out.
Anything crazy or massive shifts from May 2025 to now August 2026 on the front of what we were just talking about? Because I feel a lot of the momentum. I have the conversations with people on the show. We see all the announcements on the front of BlackRock was already in, but like firms from them to Cantor Fitzgerald to KKR to Hamilton Lane to all these different types of companies, Apollo, are coming in, and it seems more frequent, right?
Mhm.
And even like JP Morgan, Jamie Dimon makes his comments, but like they're still coming in, right?
Yeah,
So
I mean, it's
maybe
slow.
what do
It's
you
slow.
think?
Listen, if I was of the belief if you could get the Genius Act passed, which happened shortly after our last conversation, I would have liked to have seen both of those put together, Genius and Clarity, and I think it would have been much better for the industry. I don't think the banks are going to move aggressively without Clarity, even if you have rulemaking from the SEC that literally looks and feels just like the Clarity Act. So assuming the Clarity Act doesn't pass, and Paul Atkins and his team and Selig at the CFTC write the Clarity Act more or less into the administrative law, or the way it's going to be at least administrated by this administration. That's a really tough way to build a business. And this is the thing I was saying to Tim Scott, Senator Loomis yesterday, and of course they agree with me because they're really pushing for it. How are you going to build a business if you don't have a foundational understanding of the direction of the regulation? So we have good regulation now. Go build your business. Oh, wait a minute. The Democrats have taken over the presidency again. We're putting Gary Gensler back in. He's going to mow down all the things that were put together. How are we going to have this pendulum going back and forth? It's actually embarrassing for the government. The government should be agnostic to this type of regulation. This shouldn't be left-leaning regulation or right-leaning regulation. It should be what's right or wrong for the consumer, what's right or wrong for the investor, and how can these companies have a template that they can build on.
Yeah. I think maybe on that note too, then how are the people at this conference really thinking about next steps and like allocating capital in the space in the current market? Let's just say where we are today, and then we could talk about future if we want, but like we don't really know the future yet.
Well, I mean, these are the hardcore people, right? There's 600 people here. Most of them are CEOs or founders of different companies. It could be Bitcoin infrastructure. It could be tokens that the founders of are overseeing. And so this is the members of the tribe of conviction, the tribe of long-term durability. And this is also a group of people that have gone through at least 3 or 4 bear markets like the ones we're describing. So I'm not worried about this group of people. This group of people is going to continue to build. Hopefully this conference will exist 5 years from now and you'll be here and we'll look back and say, wow, look at what actually got built. Look at these rail systems,
And Bitcoin will be at 500K.
I think so, because remember, it's not a big move. It's not a big asset anymore. You've got Micron Technology trading at $1 trillion. This is not.
I think it's the number more than anything. It seems out of reach, right? To some people.
Yeah, for now. But if you got the rules passed and the rules were solidified and the big banks came in and you could hold on your private wealth management statement at Goldman or JP Morgan, your Bitcoin exposure, and you could actually own the Bitcoin as opposed to just the ETF, and maybe you could even get yield off the Bitcoin where you're, like a banking deposit. The Bitcoin is treated like a banking deposit where they're offering yield. All of a sudden, you could see this thing grow. And remember, if you're going exponential in AI, and let's stipulate that AI will create potentially an economic abundance, you have one thing in the equation that's scarce and finite that can't be replicated, and that's Bitcoin. And I think that will sit in the asset stack as digital gold, store of value, or something that people will want to own. Again, listen, I've been humbled by life and markets, Jack. I could be wrong, but I think I'm right on this. And, I put a lot of my money into it. I put my business into it. We created a conference around it. I think the real issue will be what will happen in the altcoin markets, because these altcoins have actually been decimated. I was looking at these numbers, and I would just say that the ones that have usability, utility, the ones like Stellar, something like Avalanche, Solana, I think they exist because they're very efficient. They're user-friendly. You can throw a lot of product, a lot of throughput through those engines, through those networks. But I think a lot of stuff will collapse to zero, unfortunately. And that's just the nature of the beast. I just want to give you an analogy and I want you to think about it. Okay, and I'm going to show my age now. Okay, so just get ready. Okay, this is ancient for you, but back in 1998, I had a fat box computer
Yeah.
at my asset management desk. I had a dial-up modem, ladies and gentlemen. Okay, and so you clicked on a little button, and then it whirred and burred. It caught a dial tone. It took about 4 minutes, and then this AOL landing page came on, and I was able to surf the internet, which was sparse, read an email, send an email, and maybe buy a book on Amazon and a Pez gun from eBay.
When Amazon was also just a bookstore.
Right, exactly. And we were all sitting there, and there were pundits and cynics that says this is BS, this is overly hyped, this is never going to work, all the efficiencies that people think are going to happen as a result of the internet or Web 1 are BS. Okay, but let's say we fast forwarded, or let's say I landed from 2026. I took the Doc Brown DeLorean and went back to 1998. And I said, hey, let me tell you something, pal. That fat box is going to be a flat box.
Yeah.
You're not going to have a dial-up modem anymore. You're going to have an Ethernet cable switch that's going to get you gigabytes into the, terabyte zone, actually. And there'll be billions of people downloading 4K video on this. There'll be trillions of dollars of transactions on this platform. And Amazon is selling a book, but guess what? That logo, they're going to sell everything. They're going to go A to Z, and they're going to control 50 to 60% of the retail internet commercial activity.
It's going to be all on the
Okay, and so what I'm saying is it's still in the clunky zone. This is, to me, the 1998, 1999. I can see the promise of the technology. I can see the efficiency of the technology. And I bet you, if we're here 5 years from now, there will have been some type of convergence between AI and the blockchain, where the AI is using the blockchain as a security, and they're potentially even using things like Bitcoin or other assets on the blockchain for transactional activity.
Yeah. I was going to ask what would be the equivalent of that if we fast forward, because 1998 is a long time ago now. It's almost 30 years.
Don't hurt my feelings. I mean, I'm a guest on this podcast. You shouldn't hurt my feelings.
Hey, it's close to my age. Okay, so it feels like a long time ago. So if we fast forwarded from where we were, even like 10 years ago, let's say like when Bitcoin started, like 10-ish years ago, to then like another 10 years, so 20 years from now, what would you say would be something that when we look back on all this, it'll be so obvious that we didn't actually do it at the time?
So it's such a great question. So you have to understand that the global financial crisis was the gating mechanism for the technology. So let's say you and I were sitting in 2046, it's 20 years from today, and we were writing an economic history of Bitcoin and the blockchain. We say, wow, we didn't really understand it in 2026, but 2008, which actually probably caused the creation of Bitcoin and got the Satoshi paper written, but it was 2008 that stalled the activity. And you say, well, why is that? Well, the Dodd-Frank bill, the ultra regulation of the banking community, all of the different things that the banks had to do to stay compliant with the government, got them very, very close to the government, and it got them in a circuit of profitability. The government was lending them money at zero. They were making a spread off of the money, and they were creating profits, and they were in tight with the government. Now this new technology is coming that could cut into their profits, cut into their margins, replace them as a middle person, replace them as a middle person and create direct two-party permissionless transactions. They don't want that. So they go to the government, they get their lobbyists, they say, hey, we don't want that. We want to keep it exactly the way it is. It would be like the horse and buggy guy saying, I don't like that horseless carriage. Let's just say in the horse and buggy mode. So we have stalled all of this great innovation and all this great technology because of that connectivity between the banking system and the federal government. And so, we're chipping at it right now. And I predict by the time we get out there, that will have all fallen away. And I will stipulate to you, based on my life experience, if the technology is better, it will be used, it will be deployed, it will be adopted. And so we'll be sitting there saying, okay, I've got my phone, I can send money to you, I can send money to my mom in El Salvador, I can send money to my family in Italy. I don't have to pay the 10% MoneyGram fee or the Western Union fee, and it's instant. It'll be like the phone system. It was $1 a minute to call London in the year 2000. You know what it was in 1985? It was $3.50 a minute. It's no dollars. It's no dollars a minute.
Yeah.
Okay, so that's going to happen, and the banks are going to have to transform, and they're going to have to do different things, and some of it will be custody, some will be asset management, services.
Yeah.
But we'll be in a totally transformed world. You know, if you go to ChatGPT or Claude, and you say, what are third-party transaction fees globally? The estimate is about $4 trillion. So I want you to think of the magnitude of that. And I'll be telling you that
But the people that are making that money don't want that to disappear.
And they're going to fight it. They're going to fight it to the very end.
Yeah.
And they're going to pay lip service to innovation. They're going to pay lip service to efficiencies, and they're going to fight it to the very end. You know, the taxi commission in London. Do you think they wanted Do you think they wanted it? Okay.
In New York, there's a limit on it, how many Uber drivers there can be.
Okay, that's regulation, because they are fighting the technological change to keep the existing structure. You don't think there's going to be a fight over AI and the development and deployment of AI as it transforms jobs, changes jobs, causes job loss in certain sectors and maybe job growth in others? They're going to fight it. That's what we do. We're human beings. That's what we're made of. But this is a technology that is usable, and this is a technology you will be trading for sure. We have the capability now, and we are doing it. But I'm talking about the New York Stock Exchange will be open 24/7, 365, and you'll be able to trade your stocks or the S&P 500. If it's midnight on Christmas Eve, you can lock and load on a trade.
That's where I want to be on midnight on Christmas Eve.
I don't want to be there. I'm not on Christmas Eve, but you know what I'm saying? You have the capability.
No, it's true.
By the way, that's going to create more liquidity.
Looking back, like, oh, there was a time when we couldn't do this. Or like the way people drop news after the markets close, right? And like that intentional action sometimes will no longer be an option if it's going to be 24/7.
Well, so to me, that means the markets will be more efficient.
No, of course.
The markets will be more liquid. And there'll be less, believe it or not.
Less volatile too, because
I do.
it's like,
I do, because there'll be less risk.
Like confined.
There'll be less risk. Also, I won't have to do a off-market trade with somebody over the weekend. You know, sometimes I see bad news over the weekend and Bitcoin gets slammed. And I'm like, well, of course Bitcoin's getting slammed. It's the only market open, okay? And it's the only place you can take risk off. Okay, the flip side is you can see Bitcoin go up over the weekend if there's good news. And a lot of that will be muted by the new technology that's going to be adopted.
It should be no surprise to our listeners that market maker quality plays a major role in any token's liquidity, trading conditions, and ultimately its price. But until now, market makers have been difficult to compare and impossible to judge based on performance. Forge is changing that with its market maker leaderboard, which is now live on DeFi Llama and Strata Media's Token Relations. Using data from 500 plus token projects, it grades leading market making firms from AAA to CCC. For traders, market maker quality is now an important metric to study alongside volume, TVL, fees, and unlocks whenever evaluating a new token. And for token projects, the leaderboard is the go-to resource for determining the best market makers to work with. For more details, go check it out via the link in the show notes.
Do you think the banks actually want to adopt blockchain technology and digital assets, or are they still in this era of like, we would like to keep it as is?
So okay, so that's such a great question. So I'm now going to get myself in trouble with everybody. Okay, so I think they do. I think they do.
You do want to do.
I do, but I think they got to deal with Elizabeth Warren, and they got to deal with people in the government. And unfortunately, we're run by a gerontocracy. Okay, you know, you got this guy Chuck Grassley. I think he was like George Washington's great grandfather or something like that. He's never leaving the Senate. He'll be there long after I'm dead. Maybe be 150 when he leaves the Senate. So you've got these people that will not retire. Okay, credit Cynthia Loomis, who's one of my favorite senators, by the way. She's retiring, but a guy like him is going to be 95 running for re-election. So to me, if you're going to be in a gerontocracy, you're going to have a group of Luddites, like an Elizabeth Warren, okay, like this guy Sherrod Brown that's trying to reascend in the Senate in Ohio, which is going to be bad for our industry if he wins. Those people are going to do everything they can to block it. And those are the people that the government affairs person at the big money center bank is saying, go down to Washington. You got to say that Bitcoin's a decentralized Ponzi scheme. You got to say it's a pet rock. oh, by the way, we're spending $500 million developing blockchain technology, our own coins in our shop. Don't mention that.
Yeah.
But let's mention how bad it is, because you got to have Elizabeth Warren off your back, okay? Because when she gets back into power and there's a Democrat as a president and she's writing letters to the SEC, they're going to cost us hundreds of millions of dollars of nonsensical regulatory oversight and law and legal fees.
Yeah.
So that's what's going on. Oh, by the way, if you ask them, do I want to have my margins cut by 80%? No. But is it going to happen? Yes. And so do I need to be a part of it to get in front of it to make sure I can retain my customers? I think yes. Remember, people were like, wait a minute, the internet, that's going to make the phone company non-existent.
Didn't they also try to regulate the internet like a long time ago?
They did.
Wanted to limit it. I remember that. I was like, how are you going to do that?
They did. Well, they couldn't. Well, this is the beauty of Bitcoin. How are you going to regulate it? You're not going to regulate it. Good luck.
Yeah.
They said no, can't have Bitcoin in China.
I remember this.
Okay. Yeah, can't. Pull all the mining rigs out of China. 10% of the mining still happens in China. 14% of the transactions still happens in China. What are you going to do with it? You can't. Okay. I guess you could shut down the electrical grid of the world, and we can go back to the caveman, and then you won't have Bitcoin. But I don't see that happening. Yeah. I mean, anything can happen here, okay? But I don't see that happening.
If you're building with stablecoins, the question isn't can you just issue one, it's who do you trust to get it right. Regulated stablecoin issuance starts with Anchorage Digital. Home to America's first federally chartered digital asset bank, Anchorage Digital brings a level of regulatory standing most players in the space simply don't have. This means end-to-end stablecoin issuance built on a compliant foundation. Pair that with correspondent banking that connects stablecoins to the traditional financial system, and tokenization infrastructure that lets institutions bring real-world assets on-chain, securely, and within the rules. To find out more, visit Anchorage.com.
How do you think about planning for the future with maybe the pushback that we've been getting from the Democrat side? And I don't want to go too political because we'll talk about that on Crypto in America, but maybe like from your business perspective, obviously like things are very pro crypto right now, but that's not always the case. You've been through many cycles where we've been up and down.
Well, I mean, I think, listen, I mean, I've been very open about this, and the president has decided that he has latitude and he's going to do certain things that past presidents haven't done. No past president has launched their own meme coin 3 days before their inauguration and took $800 million out of the meme coin while people lost $3.8 billion. We haven't had that happen with the other presidents.
Yeah, no Biden.
So yeah, there was
a Bowden coin, but that wasn't made by him.
Okay, but you know what I'm saying, okay? And by the way, there's whataboutism, and so Hunter Biden was selling paintings or going on board of Burisma. I'm just observing the thing. I'm not even making a political statement, but I'm just saying the action of doing that did create a problem for the industry. Exactly how I predicted in January 2025. Is like, okay, he's doing that. Maybe he has the right to do it. Maybe they'll investigate him. Whatever.
We're gonna deal with it.
But his adversaries are going to block him. And what do? They put this big fat ethics provision in the Clarity Act. Did we really need that? Well, the answer is we didn't need that, but that was his adversaries doing that so they could block it because they didn't want to give him a win. Okay, now maybe it gets done. I don't know. Okay, I'm not close enough to it. Senator Loomis and Senator Scott say 50-50. I don't like the math. If you put a gun to my head right now and said, is this going to get done? I'm going to say no. I don't think. You think it's going to get done?
I don't want a gun for 50-50. No.
Okay. Yeah. All right. But you think it's going to get done?
No.
Okay. So I don't think.
A lot of people have been very optimistic about this, and it's their job to be optimistic. But it feels like I've been having the same conversation for months.
Yeah. And by the way,
government moves so slow.
Look at the math. You've got 47 Republicans possibly. Yeah. And that means you need 13 Democrats, and you got to get that done in the 7-week period between then and the end of the session before the midterms start. So you're going to want to pass a piece of legislation like this going into those midterms.
Yeah.
I don't see it happen.
I've been wrong, but yes. I think
listen, it would be great for it to pass because I've said this to my friends in this industry, the enemy of progress in Washington is the pursuit of perfection. Yeah. It's not going to be a perfect bill, so what? Remember when we beat Gensler in the lawsuit, we were able to get the Bitcoin ETF. but then he jammed us, right? You could only put cash in, then you had to take cash out, and then when you had the Ethereum ETF, there was no staking or whatever they call it, the economic provisions. Why would you do that, right? So Atkins unraveled all that, but you had to get it started somewhere. So I'm telling people, get the Clarity Act, and then we can work on it and we can scaffold it later. But let's say it doesn't pass, which I think is the most likely scenario.
So how does the industry move on?
So the industry will chug along. Weirdly, Bitcoin, it's almost a positive for Bitcoin in a weird way. Just hear me out for a second. There's so much morose dysfunction, and there's such a runaway freight train, to quote Lynn Alden, of governmental spending that nothing is going to stop the train. That it's almost like, okay, wow, they can't even get a piece of legislation and a piece of regulation passed that would help the United States maintain its mantle of financial services leadership. Okay, Bitcoin, buy Bitcoin. Okay, and here's the thing, like I don't even get this. If you want the dollar to be the reserve currency for the next 50 years, where there's so many existential benefits to the United States, you want the thing to pass Coincidence is the Genius Act, because what's going on with the stablecoins? Look at the holdings of Tether and Circle. I think Tether has more U.S. treasuries now than Germany and Japan. What do you guys want to do? Okay. Right. And by the way, the stablecoins globally, what are they mostly denominated in? U.S. dollars. So the technology would actually further the demand for U.S. dollars. The fact that you're sitting there fighting over a piece of legislation like this is nonsensical and proof positive that we're in a wildly dysfunctional government.
Do you think stablecoins will have a greater impact on the market and adoption than Bitcoin? Thinking on the front of like payments, global market infrastructure, things like that, dollar dominance.
Yeah, listen, it turns out that Bitcoin got us started. It turns out that the biggest market share will ultimately be stablecoins. But again, you got to get the regulation right for that. Look at the cap table; they're still below where Bitcoin is in terms of the capitalization of them. But will they be larger than Bitcoin? Sure. But does that mean there's still a role for Bitcoin? I think so. Novogratz and I, we speak once a week. We have our own podcast together, and we talk about this. There's a role for Bitcoin, and also people that are younger than Mike and I are going to look at Bitcoin as digital gold. They're going to say, okay, I'm going to have some exposure to Bitcoin in my overall tactical asset allocated portfolio. And again, we're not talking about big dollars in the scheme of the overall markets. We're talking about a $1 trillion asset going to 10 trillion over the next 5 to 7 years. And I think that that's very possible.
I think the young generation understands that and sees that right now, like that they're buying Bitcoin and they feel similarly.
I think the younger generation right now is probably more focused on AI, if I'm being brutally honest. Yeah. I think the younger generation has gotten a whiff of prediction markets. Hopefully they've been burnt enough by that. Gambling. So hopefully them
use it as I think it was 40% of kids now see that as like a viable way to make money.
Yeah.
Which is just so devastating.
Because I just reminded all those people the house always wins.
Yep.
So I think yes, I think they look at Bitcoin as an interesting concept, but I think the younger generation, and unfortunately I do remember myself when I was quote unquote part of the younger generation, I was a momentum person. Yeah. I knew so much more about life, and I knew so much more about the markets with so much more certainty 35 years ago than I do today.
Why is that?
Because I was naive and stupid and immature, and I lacked. Yeah, I was an egocentric know-it-all at a very young age, and I had to get my ass kicked by the markets and by life to be more humble and to recognize, okay, this is an obscure story, but I got to tell it real quickly. So I had bought these like call options on this biotech company.
What year is this?
This is 1991, and they were developing a cure for sepsis, and the company's name was Centocor, and they went from the phase 1 trial to the phase 2 trial in the FDA approval process. and I made $50,000 for myself. And that was a lot of money. It was a lot of money back then. And I was a biotech. Did you know I was a biotech guru? I knew more about biotech than anybody in the world. So what do you think I did? I rolled all the profits into the phase 2 to phase 3 trial. And of course, the FDA gave the bird to the company, and the company went to zero. And I dug myself a hole in my margin account, and I blew myself up. Okay, and it was a lesson in stupidity, and it was a lesson in overreach, and it was a lesson in intellectual certainty based on false ideas about myself. So when you're young, you gotta, recognize that there is a process. The turtle wins the race, and it did take me a long time to figure that out.
I don't think there's a perfect answer to this question, but how do you know when to kind of let things sit and when to put more money into something?
It's a great
Or when
question.
to take it out?
It's a great question. So I don't know the answer to that question, but I can tell you my process. Okay, my process is, where am I in terms of my overall portfolio? How much pain can I take? And is there a thesis break? Did the facts change so overwhelmingly? And am I smart enough to be emotionally detached from my position? So 2 quick stories on that. One is, I rented a office space in 1999. My company was doing very well. It was Web 1. The internet was doing very well. And we got caught in the March 2000 tech wreck. And I made a decision to pull the lease. It was a 10-year lease. And I had to pay the landlord 1 year of the 10-year lease to get out of the lease. And it was literally, so I took a $900,000 loss at the time. Jack, it was the best decision I ever made, because I got the company into a better cost umbrella. I had to go through the tech winter of the 2000 period, where the NASDAQ got like sawed in half, or it dropped to even like 70% at the low. But I had to make that decision. And rather than putting my pride in, because I had told everybody I was moving into this big office, I took the pain and cut the thing. That's example number one. So you sometimes have to look at your life circumstance, and you have to be bold enough to detach yourself to make the decision. Example number 2 is Bitcoin. So looking at Bitcoin, is the thesis changing? Is there a thesis break? Is there something about Bitcoin where it went from 126,000 to 60,000 that I should be saying, okay, is the Bitcoin story over? Mark Cuban said that it is. Mark Cuban made a decision that it is. Okay, you rolled your eyes on that, but I made a decision that it isn't. Now he's
audio listeners. Yes.
yeah, okay. Now he's smarter than me. Now maybe he'll be right, but I don't think so. I look at it and say, no thesis break. We've had a consistent 4-year cycle. Mike Novogratz said yesterday from the platform here at the symposium, he said, say whatever you want, but the Chinese believe in the 4-year cycle. And so guess what? Sometime in October, November, you're going to see an influx of capital into Bitcoin, because it's part of the self-fulfilling perpetual prophecy. I mean, this is what happens. And so to me, let's see. Now, if you tell me we're 2 years from now, and you're inviting me on your podcast, and Bitcoin's at 21,000, and it didn't move, and we never got clarity passed, and the technology is not being adopted, and everything that we think in this industry is not actualizing, then I'll say, okay, wow, I really got that wrong. I really missed this whole thing, and I will have to own up to that. It won't be the first thing in my life I've gotten wrong, by the way. I've got a phone book of things that I've gotten wrong. But I don't see that, because the axiom that has worked throughout history is, the technology better than the prior technology? Is the horseless carriage better than the horse and buggy? Okay, is the plane going to get me to Europe faster than the transatlantic boat crossings? Is that going to get me to Europe faster? If the answer is yes, it's probably going to get adopted. And so that's what I see.
Right. Can I ask how many assets you own? Like, do you track all of them, or are some of them the bigger positions where you're like, this is the ones where I monitor and I have theses?
Oh, listen, I mean, I'll say this to everybody, like, there's an expression that the shoemaker's shoes are always the most worn. meaning a lot of people that are in our industry don't pay attention to their own portfolio. Either got all their money invested in their funds or they're not paying attention. About 15 years ago, I hired a guy named Frank Marzano to help me with everything, my estate planning, my trusts, secure the financial security for my children, life insurance, home insurance, every portfolio outside of SkyBridge. And he's done a brilliant job. And so he probably tracks it a little bit more carefully than me. He's pissed off at my Bitcoin exposure because my Bitcoin exposure, when you look at the portfolio, it goes from here, and then last year it goes to there, and now this year it's back to here. And he's like, he's not in love with it. He's more of a traditionalist. But I would say that I do track things, and I would say that the biggest mistakes that I've made in my career are selling early. I sold Microsoft, I've sold Apple, I sold Google. What were the right things to do with all of those? Just sit in the position. Steve Ballmer it would be unimaginable for me to think when I was 35 years old that Steve Ballmer, who was a billionaire in his own right at that time, would be richer than Bill Gates. But he is now richer than Bill Gates. Bill Gates diversified, he put a lot of stuff in his foundation. Steve Ballmer didn't sell a share. You see what I mean? And I think Buffett is ultimately right. Bet the future with high quality assets and try to sit in those assets.
Yeah. A lot of the guests that come on the show talk about things that they're getting right, things that they're working on, the excitement around certain industry topics or the startups that they're building. So I actually appreciate that you're like, oh, I've gotten this wrong. I'm honest about this. But you've also gotten a lot of things right, obviously, because you're running 2 big companies, this conference, multiple conferences, you do well. So what would you attribute, maybe to round this out, like what you've gotten right? And what do you feel like most?
So I think what I've gotten right is I've been able to adjust myself. If I say the name Wolfgang Puck, do you know who that is?
Yes, I do.
Okay, so Wolfgang, well, that's one of it. That's one of his great products. Well, that's one of his great products. But he's a well-renowned chef, and he still has a place. But there's a place called Spago, and it was the hottest of the hottest places when it opened in the 70s. And he was the celebrity chef, and it was the hottest place. And he said to me about 20 years ago, he said, so every 10 or 12 years, I shut Spago, and I demolished the interior of Spago, just demolish it. He said, if the interior of Spago looked exactly like it did in 1977, I'm not getting any customers. If the menu, the hot, trendy items were exactly the same in 1977, I'm not getting any customers. And so I made this decision. I probably had more assets under management 5 years ago, but it was in assets that I didn't see as part of the future. A lot of it was in private credit and things like that. So I made a decision to morph the business. And I think what people have to do, I think something that we've gotten right, if I can pat myself on the back with this, is that we're neurally plastic. We're willing to relitigate where our business is. If you were with me 10 years ago, we were in Las Vegas and we were holding 2,000 people conferences, and that was called SALT. And they were a lot of fun, don't get me wrong, but they're not the right type of conference for where we are in the world today. This is a better conference in many ways. It's much more concentrated. It's a higher end group of people. There's mostly C-suite people in the room, or founders of tokens. And so people come back to this conference regularly because they're like, hey, I want to be in that crowd. I don't think these larger conferences give you the same amount of impact. We had to make, by the way, those were very profitable things. I could have stayed doing those things, and maybe they would have stayed profitable, or maybe they wouldn't. I made a decision to transition. I made a decision in 2020. And again, when I say me, I should say we as a company, we moved into digital assets. And I looked really right in 2021 when Bitcoin was at 69,000. I don't know if you remember, Gensler said we could have a Bitcoin futures product. And then I got it really wrong in 2022 into the crypto winter. And then all of a sudden I got it really right after Donald Trump won re-election. Now I'm getting it wrong again. And I don't think you look as stupid at the bottom or as smart as you look at the top, but I'm betting this trend. I'm betting that this is where we need to be. And maybe 5 years from now, maybe sooner than that, I don't know. Maybe I'll be relitigating this. We do other things at SkyBridge. We have a late stage secondary product that's done amazing. We've had success in SpaceX and Anduril and Anthropic, and we've owned all of those different assets, which has helped the firm's balance sheet, helped our customers. But the things I think we do well is when it's time to move on, we move on.
Yeah. Maybe that leads into my last question for you. Can you leave us with a piece of advice, something maybe that has helped you over the past year?
Well, I mean, listen, I don't want to be overly pedantic. I would say self-honesty is my piece of advice for everybody. Is the hardest thing in the world to admit mistakes. It's the hardest thing in the world to admit a mistake in a personal relationship, an investment, a career decision. And it doesn't have to impugn your self-esteem to be self-honest. I think sometimes people feel, if I admit that, then it weakens me or makes me look worse. In fact, if anything, it makes you stronger. I think if you're open-minded to your own fallibility, you can become a better investor, you can become a better friend, you can be better in a relationship. And so my advice would be self-honesty. And by the way, it's very hard to do. Okay, trust me, we don't like it as a group of people. It's like what Jack Nicholson said in A Few Good Men. You think you want the truth, you can't handle the truth. We just don't like it, But if we can try to do it, and with self-honesty, just one last piece of this, with self-honesty comes self-forgiveness. You got to let it go, man. I got fired from the White House 9 years ago. You think I kicked myself in the pants and say, oh, wow, I did something stupid, got myself fired from the White House? Let it go.
Yeah, I love it. Amazing. We'll let it go.
All right.
Anthony, thank you again for coming on.
Thank you. It's always great. Yes. You should be selling this hat on your, you should be putting out like a QR code for the hat.
Yeah, well, we'll sell it on the Talking Tokens page. There we go. Amazing. Anthony, thanks again.